Welcome back. Just a short while ago, the Reserve Bank Governor Lesetja Kganyago telling us that the repo rate remains unchanged at 7%. The prime lending rate at banks 10.5%. That was in a briefing from the Reserve Bank in Pretoria just moments ago. We continue with the discussion. Thabo Leoka from Argon Asset Management and Makwe Masilela from BP Bernstein. Let's start with you. We were talking about the impact of interest rates on the consumer. Makwe, if it's not coming from an interest rate cut, where is this reprieve going to come from as far as the consumer is concerned?
I think it would be too ambitious to expect a cut now. I mean, the guys since 2014, they've increased by how many basis points? Almost 200 basis points. Was the consumer better off then? No, he was not. So what will make them start cutting now? But I think what we need to do, I mean, we know global developments, we don't have control over that, but we've got money that we can spend back home here, infrastructure spending. How many times do we hear about that kind of money? I think maybe we need to start criminalizing people who are allocated budgets and not using them because you're causing us, you know. So at least we should be doing something from our side as well. Here's Donald Trump. He's going to focus on infrastructure as well to try to boost the US economy. And we do have some funds. It might not be too much, but there's something that we can use that can also maybe try to help us going forward, especially when it comes to consumers.
Thabo, you always get the school of thought that says, Reserve Bank, please cut rates, let's stimulate the economy, get more involved as far as your mandate is concerned into growth. Do you think that's justified?
You know, I think that it's still questionable to what extent does cutting, especially 50 basis points, what impact does it have to the consumer? And it always, these discussions always happen when growth is slow, unemployment is high, and inflation is high, and the SABC is hiking. There's always, people from different corners of the argument saying that, look, we need to, in this environment, you need to cut rates to stimulate growth, and it may not result in stimulating growth or lead into a growth in consumption. And I think that it goes back, all this goes back to, it's not the Reserve Bank that's responsible for economic growth. And I think it goes back to policy, that the economic cluster needs to work together to stimulate growth. And we need to do it in many ways and try not to get downgraded, because that will move us back. And I think that should be the focus. This whole, relying on interest rates or relying on Treasury to help us from getting downgraded, it doesn't help. We all need to, from different economic clusters. And I think a point that you make that was important is the private sector needs to step in as well. We need more, in terms of government doesn't have money, but the private sector does. And we need to have more private public partnerships in order at least to help to stimulate growth.
And that growth figure, Makwe, 0.4% forecast for 2016. It's a fraction below Treasury. Ratings agencies are watching these numbers coming out from these institutions. It's not really a great sunshine time for us as far as those figures are concerned.
Not at all. We still have a very long way to get out of the woods, And as Thabo just said, it's very important to make sure that the government's role is to create an environment where people can create jobs and create the necessary growth. So that's very critical. So you need the private sector as well to come in there to play their part.
Growth for next year, 1.2% forecast. Think that makes sense as far as your calculations are concerned, Thabo?
I mean, it's not too far from my estimation. I have 1%. But again, I think, we came from, after the financial crisis, we were talking about 3%, 4% growth, and now we're celebrating anything above 1%, which is quite sad. Without, following at least, it may not be popular now, but at least a growth plan that will lead us to stronger and more sustained growth. And right now, we're just hoping that we just grow a little bit above 1% so that we can appease the rating agencies and all of that. But we're not really focusing on, what would stimulate economic growth.
I just want to bring our growth trajectory to what's happening globally. I mean, he's spoken about the fact that you have Brexit, you have Trump as president in the US, a lot of uncertainty as a blanket globally. Just put the global economy in context of how we look forward in terms of our growth.
Just to add on that, people tend to forget that comes the 4th of December, we've got that Italian referendum, that can turn things the other way when it comes to their banks. Come, I think the 12th of December as well, you've got the Greece. They have to sit down with the IMF and whoever have been funding them, bailing them out, to see whether, guys, have you done what you need to do? Can we give you more money or so? So we still have two possible headwinds as well, come December. But yeah, when it comes to global growth, yes, when it comes to commodities, we have seen that at least they managed to turn up. Whether was it because of Donald Trump or not, I don't think so. It's more because they were at least turning up, you know, and then he managed to help and exacerbated the whole turning up. But that, if it continues, it can help us. You check the iron ore prices where they are. They're no longer at that lows. You check what's happening with the copper prices, coal as well, you know, if you manage to get the coal industry up and running in the US, that can at least, you know, help us a little bit, and that can also cushion anything that has to affect the rand negatively, given that we're an exporting country when it comes to commodities.
Well, just to wrap up now, Tabi, the food price, I mean, not only is it a big component in the consideration of inflation, it really gets down to the bottom of people buying goods in a supermarket. He says the pace of the decline of food prices is much slower than they had initially anticipated. So I would imagine that you would have the double-digit figure on food price inflation, which is sitting at 12% in the moment. It's going to take a slower time to get out of that bracket, is it not?
It will, and I think the other risk, if the currency remains elevated, is we import a lot of food, and we'll import a lot of grains because of the droughts. And if we continue to import at the current, you know, at very weak currency, it will then impact on the cost of food prices. So that's another risk to food prices moderating. Yes, I expect them to moderate because the drought, the impact of the drought is actually waning, but the currency is still a risk, and because we also import quite a lot.
Yeah, just to wrap up a few seconds, it was really a lot about the rand this afternoon, wasn't it, Makwe?
By all means, and I think to be on the safe side, the governor should start to say that this whole thing will be data dependent, how they're going to take, how they're going to react when it comes to interest rates going forward.
Yep. All right, we're going to leave it there. Tabi Lyoka from Argon Asset Management. Thanks very much indeed. Makwe Masilela, BP Bernstein, thanks indeed for coming in. And that's a wrap-up. Just a quick reminder then, the repo rate, as far as the Reserve Bank is concerned, stays unchanged at 7% for all the banking clients, of course. 10.5%, that's your prime lending rate at the banks. That's it for now for this special broadcast.